Hello and welcome to this May 7th, 2010 video version of InvestEd Central's Chart of the Day. I'm Tom Boley, InvestEd Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are featuring the equity-only put-call ratio and the way we use it in measuring key sentiment in the market, in determining sometimes short-term bottoms or short-term tops. If you take a look at the chart here, actually at the top, what this is just a daily chart of the equity-only put-call ratio. This comes from the CBOE, all of this data, and you can see that we've had for the most part, we've kind of hung between about 0.45 and 0.75 with a little bit of movement on both sides. Early April, you can see we got incredibly complacent with some very low equity-only put-call readings. This reading here in early April was the lowest that we had ever seen. And right here in this black circle, we take a look at the what I like to refer to as the relative pessimism or relative complacency ratio, and any time that this ratio gets up above 20%, if it gets close to 20%, it starts to signal a tremendous amount of relative complacency and many times marks market tops. Now the actual ratio itself, if you take a look at the red line over here, this is a price oscillator. And what I do is I use 60 and 60-day and a 5-day parameters, which the price oscillator, this works a little bit like, or a lot like, the moving average convergence divergence, or the MACD. And what we're trying to do is gauge the relativity between the 5-day moving average and the 60-day moving average of the equity-only put-call ratio. Now the 5-day moving average, when it when it falls below the 60-day moving average, then the relative ratio turns positive. And when that number reaches 20% or more, the tendency is for the market to top, or at least you know that you're getting close to a top. On the flip side, when we get to a number that's down here at the minus 15% level, you can see over the course of the last 10 months, we've done that on a few occasions. Actually, we're there right now. But each time we've done this in the past, you can see the S&P 500 is the blue line here. But you can see that as we've hit this minus 15% level on the relative pessimism ratio, you can see that that has in fact marked short-term bottoms for the S&P 500. So here was one in early October. We did it again at the very beginning of November, and then again we got down close to this minus 15% in early February, marking that bottom where we just had the big move to the upside. Now as we get close or above the 20% threshold, this is starting to show a lot of relative complacency. So as the market moves up, you see a lot of call buyers versus equity put buyers. And as a result, it just tells you that everyone starts to think the market can't go down. And that's normally when the market goes down. So you can see when we hit these points of 20%, you can see the red arrows being drawn on the S&P 500. And you can see shortly thereafter we took a little bit of a dip. When we did this again, almost reached 20% in mid-October, you can see once again we took a dip. Did it again in January. It marked the top in January, and then just recently we had record relative complacency, and that has led to some of the big selling that we've seen here recently. So I hope that this helps in maybe taking a look at sentiment and how that impacts market tops and bottoms. I hope you've enjoyed this presentation today. Be sure to check out our chart of the day every day at InvestEdCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.